I didn't know that. Good evening, everybody. My name is Jennifer Carter. For those of you that don't know me, I am the Chief Operating Officer and broker here at Ardent Residential. I have been doing community association management in Georgia for over 20 years. I'm really excited about this month's webinar, Underinsured and Out of Luck, and a fabulous co-host that I have here with me, Lillie from Bouvier Insurance. Kurt, why don't you introduce yourself to everybody and all your credentials, because you do have an alphabet behind your name.
Thank you. Yeah, no, happy to be here. So I'm Kurt Lillie. I'm the Vice President of Bouvier Insurance. We're an independent family-owned agency. We have a kind of particular specialty in community associations. It's really what we hang our hat on. Our agency insures about 3,500 communities across our offices. I'm the vice president for our Southeast offices between Nashville, Atlanta, and Fairhope, Alabama, actually, our newest office. And this is really all that I do as an agent. I don't mess around in other industries. This is it, top to bottom. This is what I live and breathe. So, I'm a certified insurance counselor. It's a big designation in the insurance world. Just been around, and you can speak the language a little bit. I'm one of 90 agents nationally that hold a CIRMS designation. It's a community insurance risk management specialist. It's really the paramount designation for anyone who wants to specialize in this field. And then I have a couple other ones of management liability, really specifically for directors and officers. So everything that I do is related to community associations. I don't venture too far outside of my wheelhouse in this.
That's awesome. I'll tell you guys, Kurt is our preferred insurance broker. It's really important for Ardent to work with only the best of the best in this industry. And I'll tell you, Kurt and Bouvier are definitely that. And I think that after you hear him talk tonight, and we talk about some real challenges and common pitfalls that we see board members doing and choosing insurance brokers, or choosing the wrong type of policies, not really knowing what their coverage is. I think you guys are going to understand why he is the best of the best. So I want to go ahead and do my disclaimer that I do at every single webinar, right? I have to make my disclaimer. So today's webinar is for educational purposes only and should not be considered as true legal advice or counsel. This is just an informative webinar. You should review your community association's governing documents for specific detail related to your association's possible insurance requirements or provisions, and or consult with your manager or your community association's attorney. So that's really important. Kurt is definitely here as a co-host and an expert at this topic. So he's a subject matter expert here. And so I'm really excited for you guys to learn a lot and listen. We are recording this, so this will be put on the Ardent website and emailed out to anybody that's missed the webinar. I wanted to let everybody know, of course, everybody's on mute, but please feel free to put questions in the chat. And we will get to those questions at the end, time permitting. We do like to keep our webinars 30 to 45 minutes max, because I have found that once you start to go over that time frame, you start to lose the attention of the audience, and we don't want to do that. We could literally be here, Kurt, could we not be here for like 5 hours talking about insurance, right?
I don't even want to do that myself. No.
And, if anybody hasn't seen the movie The Blind Side, Sandra Bullock plays the main actress, and she says at the very beginning of the movie, she's like, the first bill you pay is your mortgage, and the second bill you pay is your insurance, right? So that's kind of it's really how it works. I don't think that insurance gets enough attention or there's enough information out about it, and I think that it's because it can be a very convoluted topic, right, Kurt? Like, it can be very confusing to understand.
Yeah, it is very confusing. I mean, so most people are familiar with insurance because they have a home or auto, or they have a condo unit or a townhouse unit that they work with. So insurance is a familiar term, but once you get into community associations, and especially serving on a board, it is very, very different. Commercial insurance is very different than personal lines insurance. The terms and conditions are very specific. Nothing is as it seems, especially on the directors and officer side. You could look at a policy and say, oh, well, I have $1 million limit. It's like, well, insurance policies are just contracts. And if the contract is garbage, your coverage is garbage. So
Right.
regardless of whatever the limit says, it really gets down to the details. And if you don't have the in-depth knowledge of how to navigate the waters, you really are flying blind. So working with a solid management company and attorneys and insurance professionals who speak this language well, it can't be overstated. It's people try to do it themselves all the time, and they get themselves in hot water real quick.
Yeah, exactly. And so we're going to talk about a lot of things tonight. What I want to start out with talking about is I always find it interesting when something is marketed to me. We all get emails and marketing for webinars. Obviously, there's going to be something about a topic, whether personal or professional, that might draw me into wanting to attend that webinar, right? So, of course, you're all here. If you've joined the webinar, or if you're watching this video, you're watching it because obviously this is maybe a buzzword for you. Maybe you want to learn more about it. So why is this topic so important, and why is it relevant to you and your community association? I think that, we're going to talk a little bit. Obviously, I think you're going to understand by the end of this webinar, obviously, why this topic is so important and relevant to you and your community association. But I think that even more so, I think that what you want to understand is that you don't have to go in this alone, right? We're going to give Kurt's contact information out at the end. And he'd be more than happy to talk to you or your board, no matter what management company you're with, right? So Kurt works with all the management companies out there, and he's happy to talk to you guys. And so, it's important for you guys to know that he would be there for you to kind of take a deep dive into your insurance. He would be able to do that for you. So it's relevant to you guys because you have to have insurance. You have to have insurance. Even if you are a small community, five homes with an entrance sign, and that's it. You need to at least have D&O coverage at a minimum, right? As a board, you want to have D&O, which stands for Directors and Officers Insurance. And you obviously would want at least some sort of general liability and property insurance on your entrance sign. And a minimum, right? And then we're going to talk a little bit about the different types of insurance policies here in just a second, but it's always, Kurt, why don't you talk about, what we were talking about the other day with, you've seen more claims this year with, what was it with the entrance signs getting hit?
Motor vehicle accidents. Well, I'll touch on the directors and officers side first real quick. And like you said, even for a small community, there's nothing in state law that says that you have to have directors and officers coverage.
Mm-hmm.
Not state law per se. Even most governing documents may not even say it. They say that you can. Some say that you have D&O, but what's always in the declaration, or sometimes in the bylaws if it's an old community, is that they have an indemnification provision. And the indemnification provision states that the board, the duly elected board, cannot be held personally liable for any lawsuits brought about in the course of serving the association. And so it's basically saying that the association is going to protect the elected board members. And whenever there's a lawsuit, the association has to protect and indemnify those officers. And the way that you fund that indemnification provision is through a directors and officers policy. So if you don't want to have a D&O policy, I think you're going to end up in a really bad place when you start getting attorney's fees tacked on to your bill. But that's where the beauty of a directors and officers policy responds to. For $1,000 a year, you get that indemnification provision funded. Mm-hmm. So in the event that there's an ARC dispute or a fair housing discrimination dispute, someone wants to paint their house pink for whatever reason, and it's not in the architectural review committee guidelines, the board will be defended against that. Or if someone feels that they're being harassed and they want to make file a suit against the association, your D&O policy should be there to protect the association and defend you in court. And how it handles non-monetary claims like that is something that we can get into. We get off into the weeds of D&O coverage. So that's the nuts and bolts of D&O. But yeah, I've had probably in the past 12 months, I've probably had at least 10 motor vehicle accidents where people drive into entrance monuments and entrance signs. And The latest one that I had was, it was a road rage incident where someone bounced off two cars before hitting the entrance monument. And usually we want to be able to file a third party claim against the auto policy of the driver. And it makes sense, like the association is not really at fault for this, it's the driver. But this individual was excluded under her own policy. So there's no coverage. I got on the phone with the claims rep on the auto policy carrier side and said, yeah, we understand what your position is, but we don't offer coverage because she's excluded. So you can go after her personally. I said, that's not what we want to hear either.
Right.
We've had more hit and runs. We've had, every now and then we get one where people are well insured, and great, we can go to State Farm or Allstate or whomever it is, and maybe they'll cover the cost of the damage as long as they're adequately insured, but not always. And so
you're seeing these policies, these general liability policies with these small community associations with only like a $5,000 like that's all their coverage. And these signs can be, even small signs can be 10, 20, even $30,000 to replace. So
I had one recently where it looked like a water well. It looked like a water well. Was nice. It had, the entrance sign and the name of the community and everything. And a car drove in and hit it off of its anchoring foundation. It was a $40,000 claim to put the well back where it was. And it's not like it was a real well. It was just, it looked like a well. And we had enough coverage for it, but I was astounded about how much it costs to remount everything.
Right.
Yeah, these signs and these monuments can be $50,000 to $100,000 in value to put it back together, especially nowadays with the cost of labor and materials. So
right.
What may have been a $15,000 or $20,000 entrance monument is now probably a $40,000 or $50,000 entrance monument.
Right. And I'm just seeing an uptick in insurance claims in general, not just for the directors and officers. I mean, we live in a litigious society. Everybody knows that. But I'm seeing more and more of that. Like it's crazy over the last 20 years, just the D&O policies that are coming out almost daily, just somebody wanting to sue the association for whatever. They didn't get the modification request that they wanted. They got denied, or it was a, fair housing, a case, so it's all that's happening all the time. People get hurt on property too, there's a lot of lawsuits that come out of just tripping.
Yep. Uh-oh.
So simple injuries that are in the property, which again, that would fall under an injury or an actual, I guess, act of God, right? That's what they actually call it in the policies, an insurable event. Like I will use that term all the time, and people get confused when I say what policy, right? Like a flood, a pipe bursting. I mean, everything's always contingent to the language in the policy, right, Kurt?
Yeah, so it has to be fortuitous in nature. So it's if it's something that was known to someone and then it failed, it's could you really say that it wasn't known to the board, and did they have superior knowledge of the issue before there was a bodily injury that occurred? I do a lot of classes with attorneys, and one of the defense litigators that I work with, he always says, he gives an example of a snake bite. If someone was walking towards their community pool and they see a snake, and then they don't say anything to anybody, and next week they go to the pool again and all of a sudden they get bit by a snake, they want to file a lawsuit against the association. So, well, you had more superior knowledge than the board did regarding the snake. How could you say that the board or the association is at fault for this? And Georgia, not an attorney, but Georgia's a modified comparative negligence state. So the association would have to be more than 50% at fault for any injury before they're held negligent. I had another situation where someone parked their car knowingly under a broken branch hanging from a tree. And then they took a picture of it, and then they were going to send it to the board in the morning. Well, overnight it fell and landed on their car, and they wanted the association to pay to repair their car. So you knowingly and willingly parked your car under a broken branch and took a picture of it.
Right.
You have more knowledge of the broken tree than anybody else, and you still left it there. And now you want to tell us that we're liable. It's not going to happen. And of course, the attorneys got involved and they said, no, we don't insure your car. You had more knowledge than the board did. We couldn't address it in time. We're not on the hook for this. Have a nice day. File a claim with your own auto policy. So yeah, the claims are coming out of every which way. And likewise, we're seeing increases in premiums because of that. So, yeah. And especially on the property side with cost of labor and materials, the underwriting profit from the carriers are not where they wanted it to be. So that's why we've been in a hard market for the past 10 years. And there's a conference going on right now. Actually, I think it ended today with reinsurance carriers talking to the primary carrier. So every insurance company backs themselves up. They always insure themselves. Well, every reinsurance company is having increases in their premium that they charge the carrier. So, and all of a sudden there's a trickle down effect until it gets to the policyholders or, the association. So, we're going to keep an eye on it, but it's something that we are very, very diligent about in making sure that everything is insured adequately so that our carrier partners are getting their due premium and they're seeing the profit that they're supposed to. As and the association's protected as it's supposed to. So it's always a balancing act, and we're trying to find the edge of the knife constantly. But that's why we have markets that do this better than anybody else, and that's why we love this. We love this industry.
Yeah, and then let's not even start on high rises and mid rises. The type of insurance claims that come out of there. I mean, it's not just the pipes. There's so much that goes on. The roofing, the piping. There's a lot that goes into. What would you say is the biggest insurance claim you see with high rises and mid-rise condominiums?
I mean, like everything, even with townhouses, it's all water. It's all water based. So the typical structure of a especially for a condominium, if it's a mid-rise or a high-rise association, it's going to be a condominium. We would always have a separate per unit water damage deductible. And usually it's $25,000 per unit or $50,000 per unit. There's one association that I was working on that wanted $100,000 per unit. And it's because of their claims history. And it's, when we evaluate an association or we evaluate a building, we look back 3 to 5 years in their claims history. And if there's a litany or looks like a rap sheet of claims and there's a trend, it's, broken pipe, bust pipe, or dishwasher, there's something inherently wrong with the piping in the building. The carrier, to even get them to bat an eye at it and look at it, we need to sell it in a way that, yes, they know that there's an issue. They want to push this back to the HO6 carriers. They're looking to clean up their loss runs. So we want to have a high per unit water damage deductible. And sometimes we can get them on board with it. Sometimes it's, the risk is just outside of their appetite. And so it's a frequency problem where we don't want to even touch it. We're just going to be buying the next claim. So yeah, high rises, it's a lot of water losses. And then probably more often than not, we're seeing trip and falls at high rises more so than at townhome communities.
Really?
Are going from amenity decks into the lobby and they're tripping over carpets. And I have one that's an outstanding open claim right now it's $100,000 reserve on it from a trip and fall. Someone tripped over a carpet. And it's, they're trying to say that it was folded and, the association is, liable for their bodily injuries and their broken arm. And, it's stuff that the insurance responds to, unfortunately, but, bodily injury claims are crazy. I had one person fall down the stairs just from the stair cap was bent up a little bit. I don't know if someone dragged a wheel over and it bent it up. Someone fell down the stairs and they're suing the association. So yeah, so liability side, you have your general liability, and then we always have excess liability, which is your umbrella that sits over the top. So for high rises, I wouldn't write a high rise community without probably a $10 million umbrella, because we're seeing too many nuclear verdicts coming out of the court systems, and it would just be too much exposure for the association to not have a $10 million umbrella.
Right. Well, what about let's talk about, you just kind of mentioned the umbrella policy, which I think is important for every community association to have, especially like you said, if they're a high rise, mid rise, or, especially anybody with a pool, right? Definitely have to have that. You were talking about, unfortunately, it's part of the business is talking about drownings at pools. They do happen, unfortunately, as terrible and it is to talk about, that does happen. And it's a reality for any community association that has a pool. Can you tell me the story about what happened? There was somebody that got their arm stuck in one of the skimmers.
This was up in Spring Hill, Tennessee this past summer. So there's a new association, and they had the pool inspected by the Department of Public Health. But for whatever reason, there was no door on the skimmer line. And so a 5-year-old boy was swimming with his dad, and 5-year-olds are 5-year-olds. I have a 4-year-old who's crazy himself, and he stuck his arm into the vacuum line, and it got stuck. And there was, they tried shutting off everything, and he was above water, and the dad was there with him, so he didn't drown. He was very, very lucky. But they couldn't remove his arm from the line, and they had to have the fire department come out and cut through the concrete pool deck, cut the pipe, and then cut the pipe off his arm. And he was in the water for 5 hours. And I don't last very long in the pool myself. 5 hours in water, you are freezing. So yeah, I mean, we were worried that there was going to be a liability case coming out of that, but the father was very, very agreeable, and he just asked that the medical bills to have his son checked out at the hospital were covered. So we called the carrier and said, yes, we're going to cover medical bills under the MedPay expenses. There's a $5,000, basically no negligence needed. We can tap into that. It's basically police service coverage. And the carrier paid it, and the child is okay. He just the doctor said to check him out. But yeah, I mean, it could have been a lot worse.
Yeah, pools are a huge liability, and so are playgrounds. Yep. I can't tell you how many new communities that I will be, discussing with potential client, and we'll perform an inspection. And if they have a playground, 9 out of 10 times, there are total liability issues going on with playgrounds. I mean, they don't have enough, they're not code to having enough of the right kind of ground cover that they need to have for I think it's the fall, type of mulch.
Yep. It has to be 6 inches or whatever.
Yeah, and they don't have it's not thick enough, and slides that are cracked, swings that are literally rusting. Somebody could be on it and just going 6 feet, 8 feet in the air, and a child going off they could break their collarbone. They could have a concussion. They break their foot.
There's a landmark case out of Nevada. Where it's been a few years. I think it was 2016 that this happened. A 16-year-old was playing basketball with his friends, went to send a text message, and he sat down on the swing set. Well, the cross member that was going above the swing set gave way. It just fell out of its, whatever it was into or whatever joint it was in, it fell out. It was a 40-pound cross member that hit the kid in the head. And he had traumatic brain injury. He had chronic headaches, personality changes, the works. And it went to court. It was a bodily injury lawsuit. The board wanted to settle, and the board wanted to settle at $2 million. So it was policy limits that they had. They had a $2 million policy and no umbrella. It didn't settle, and it went to jury, and the jury awarded a $20 million lawsuit out of that. And the association saying, we don't have $20 million. We don't have enough insurance for this. What are we going to do? And they're, I think, I don't know how it ended up, but at one point they were trying to sue the insurance carrier for extra coverage. And the only other option at that point was to do a special assessment against the 200 and some odd homes that were in the community. And everyone was going to have to put up $100,000 or whatever it was. And it was a very, very sad case. And it was awarded against the association because they had a bid for a maintenance contract for the playground, and they said it was too expensive. And so they voted it down, and then child got hurt. A similar case happened on a lake in Indiana, probably close to 10 years ago now, where 3 brothers went out on the ice. They fell through the ice. One of them, or 2 of them, drowned, and one of them is in a vegetative state. And again, it was a $30 million lawsuit. And I think it was in 2012 or 2013. And it was because the board voted not to have no swimming, no recreational activities out on the ice because it was too expensive.
Oh my gosh.
It's a lot of these, are you sure
Here,
taking good risk
listen, the
management?
lessons here are listen to your management company when they tell you to do something, like put signs up. Okay. I find a lot of boards don't take management companies' advice. And two, get the insurance, pay for the insurance, get the umbrellas. That's really lessons learned here, Let's move on and talk about crime and fidelity insurance, because that's also something that comes up all the time with when clients are reading our and by the way, I mentioned at the very beginning of this webinar that you have to have D&O insurance, because I work in an industry where we require it if we're going to professionally manage you. So while it's not, there's no law in Georgia that requires board members to have D&O insurance, we do require, and I'm sure 9 out of 10 management companies require their communities that they manage to have D&O and general liability and with certain limits on them, because we know that this stuff happens. It's why you have insurance. So so
I
crime
don't
and
work
fidelity is another one we require.
exactly, and I don't work with any other management company that doesn't require it, because you're working at the direction of the board. So
Right.
It's really what protects management companies too. And yeah, so crime and fidelity, this is another one where it's not necessarily required by nonprofit code or the Condominium Act of Georgia. It's actually required by GREC.
The Georgia Real Estate Commission requires it.
Real Estate Commission for brokers. So if management companies have access to over $60,000 in funds, which basically any management company does if they're working with an association, they need to be insured for either the maximum amount that you would have at any given time, or 3 months common fees plus savings and reserves for any association that you also manage. So rather than having each management company have their own huge policy and changing limits all over the round as associations come and go, the GREC allows for a back door where associations carry the limit and they have management companies be an additional insured on their policy.
Mm-hmm.
And that's actually the better way to do it, because God forbid there's a management company and there's a few out there that have stolen money. You do
and that's just what everybody knows here, what a crime and fidelity insurance policy. They call it a fidelity bond. It's to protect the association against any kind of theft, whether it be management company, board member, anybody really. So sorry to interrupt you. I just want to make sure everybody knew what that was.
Yeah, it's for the protection of the financial assets of the association. And so if God forbid, an association finds out that money is missing, either from a prior board member cutting themselves checks, or maybe an accountant was stealing money. Somehow there was a gap in the controls of over who had access to the funds. You don't want to have to go through a third party to get your money back, especially if it was a management company that happened in Florida. Actually, I got contacted by a community in Naples where an association took $3 or $4 million and skipped the country. They're in Bermuda or Costa Rica now. And every association is going, what do? We just lost hundreds of thousands of dollars. It's like, no, if you were insured and you had a crime and fidelity policy, you would get your money back through the carrier. But it's the financial assets of the association. And so GREC requires it, Fannie Mae, Freddie Mac, FHA requires it. And that's usually where we find it in the governing documents. It's with lending institutions and what they require. But usually what they're only going to ask for is employee theft. And that's someone cutting themselves checks and taking money. That's not what we see nowadays. That was in the late 90s, early 90s, maybe early 2000s.
There's just so many checks and balances in place now. I think with software that's out there, it's very, it's impossible. I mean, I know at Ardent, we've got like 4 or 5 layers of checks and balances in place to protect from that happening. We don't even cut checks in-house at all, just as a safety measure. It's all handled by, in a payable system that's all that they do.
Yeah, and as the industry evolved with those checks and balances, so did the crimes. So it's not the people, even forgery and alteration, where someone's going to forge a check or alter the payee on the check. Now it's trying to steal bank login credentials. So it's either computer fraud or a funds transfer fraud, or it's the social engineering and the fraudulent transfer. So it's someone, this happens constantly, and this happened to an association that we actually insure up in Connecticut in our home office, where a manager got an invoice that looked like it came from the landscaper. Well, the landscaper, it wasn't from them. It was actually from a bad actor who had sent an invoice that looked like it, and it said, "Oh yeah, also, we changed our banking information. Here's a new number to send invoices or the checks to." And they processed it and paid it without thinking, didn't check. They didn't follow their own controls in house, and they processed the payment of $30,000 for these management or for these associations that they managed, and the money's gone. Somewhere it's in the country of Georgia, not the state of Georgia. It's
Right.
somewhere you'll never get the money back again. And it's a voluntary parting of funds that's usually excluded under most crime and fidelity policies. So it's like, great, you have the right limits, but is the coverage that you have in your policy adequate too? So
Right. There's
saying,
a common pitfall, not having enough coverage,
Yeah, it's the same thing with the directors and officers. It's like, great, you have $1 million limit, but a $1 million limit is backed up by a policy that doesn't read correctly.
Well, and think about like the cost. I mean, a D&O policy and even a crime fidelity bond are not that expensive.
No, they're not.
I
They
mean,
really
this
are
isn't.
not. It's such a drop in the bucket in the grand scheme of things for a big community.
Right.
It's just so important to have it done right, and someone to be diligent about making sure that all the insuring agreements that need to be on there are. So it doesn't break the bank to have the right insuring agreements on your crime policies. What is always the big ticket item is the property coverage, and making sure that you are getting, kind of the title of the webinar is being underinsured and out of luck. This is something that, especially in today's cost of inflation and materials and labor, I had an association go up $12 million in values over last year, and it was insured 100% of value last year. And it's just, we're chasing our tail a little bit with inflation sometimes. But there was another community that I picked up in last month. We had to add $57 million worth of coverage to make sure that they were adequately insured. They were insured for 78 million, and we had to go to 135. And it was just because they were valued at $78 a square foot.
Well, and that's what I was going to bring up as, again, one of the most common pitfalls is that we see it over and over and over again. And, a community that comes on board with another management company that's working with another insurance broker, that unfortunately that policy has just become a book of their business. And they're just kind of on this like auto renewal every year. They get a notice like 2 weeks before the renewal, and they're like, "Hey, we got to renew your insurance." Most of the time we find out very quickly that they don't even have the right square footage in. They don't have the right unit numbers. Street addresses are incorrect. Community names are spelled wrong. That could keep them from getting that coverage. Little things like that attention to detail,
exactly. It's a devil in the details sort of thing. It's we see that all the time too. So the named insured is insurance 101. If the named insured doesn't match the Secretary of State filings, it's the wrong entity. Doesn't matter if it's Kurt Lillie Homeowners Association Inc. But if the policy reads Kurt Lillie HOA Inc., it's wrong entity.
We'll exclude them from the coverage.
Yeah, all it takes is one picky adjuster. And I've talked to insurance carriers about this. So like, what would you guys do if this happened? They're like, it has happened. And usually they will try to get it covered, overlook that, it's still, they'll try to make it right. But it's happened where they've denied coverage. Said, nope, that's not our insured. That's not who we're insuring. It's the wrong entity that's sued, or it's the wrong entity that we don't insure this company. So yeah, don't give any adjuster a reason to deny the claim for something as just
as silly simple as having the wrong name on your policy, right? So, again, it irritates me to no end when we find out that, community does, like, they're grossly underinsured. And Kurt's normally able to get them well above what they need, what they actually need at a better premium, by the way. So,
Thank you.
I mean, just a little toot your horn there, but, and saving the association money. I mean, how could you go wrong there? Right.
Yeah, it's the underwriters that we work with know the quality of work that we put out, and they know that if we're going to give them something, it's accurate. And so that's something that it's always been since day one. Accuracy is key, because we have to have the trust of our underwriters, and they need to believe that what we're giving them is true and accurate. So that if there's ever an issue, they'll say 99.9% of the time, you guys don't get this wrong at all. I had a loss control inspection go through, and they tried to question my values and question my square footages. And I pulled up my Excel spreadsheet of the assessor's data. I said, all right, tell me where I'm wrong. Tell me where I'm missing values, or tell me where I'm missing square footage, because this is to the letter of what the property assessor says in the county. And they said, you know what, you're right. We're going to back off. We'll talk about it later. We're just going to waive this one for now. Yeah, so it's a time-consuming, labor-intensive process to do these things accurately, but you can't just randomly assume that every townhome unit's 1,200 square feet, because they're not.
I literally have this on the agenda. Do not assume anything, and don't assume everything is okay. If you're just renewing and you've been with the same broker for years and years and years, now is the time to do some research and to get some other opinions, because you cannot assume that you're you won't know until an insurable event happens, and then you get the bad news that they're not going to cover it for whatever reason.
Yeah. I had a board meeting last week with another community that they didn't feel like they were being valued by their agent, so they wanted to talk to someone else, and so they sent me their governing documents and some of their other items and policies information. And there's something we call so there's insuring agreements on your crime policy. It's the same way with insuring agreements on your property policy. There's different ways to write property coverage for an association. And the Georgia Condominium Act says one thing. If the association is subject to the Condo Act, then great. At least there's some guidance there. But if you're a townhouse community, or even a community association, or a homeowners association, or a property owners association, we have to look really and do a deep dive into your governing documents to see how we're supposed to write these policies. And their policy, this association that I met with last week, their policy was in violation of their own documents. And it's like, have you guys had any claims recently? They're like, no. I'm like, you're lucky. You're very lucky, because it wouldn't cover it. And I said, this needs to match here. Your deductible is capped within your documents. Like, this needs to be amended, and you have to pass an amendment to, with your attorney to get this removed. And there's a lot of steps that they're going to take before their February renewal that comes up. And it took a board just, a handful of minutes to come to conclusion that they need to make a lot of changes, and that they
and I'm glad you brought that up too, because I think that, again, if they're waiting till 2 weeks before the renewal, they've waited too long. There's not time. I want to set that expectation here too. It can take 6 to 8 weeks to get quotes, to get all the information you need, first of all, to gather all of your information, and then to actually get the quotes. So it's not an overnight process by any means, and it certainly can't be done in 2 weeks.
There's too much information to get. We've had other situations come up where it's a fire drill. And it's like, can we turn around a fire drill? It's like, sometimes we can if we have everything at our fingertips and we catch an underwriter on a good day. But there's a queue of accounts that we're trying to get through, and living on fire drills is not fun. No. So yeah, if we can start 2 to 3 months out, that's hallelujah. Then we can put it to bed early, and it's not an 11th hour deal that we're rushing at 9 o'clock at night to put in place for the next day.
Those are not fun.
Nope.
Not fun. Nobody wants to work in a reactive mode. 2 things we didn't talk about real quick, and I just want to touch on them real quick, Kurt. And I get this question a lot too, is why do we need to have this? And we don't have any employees, but like workers' comp and auto policies. Can you touch on those?
Yeah, so the auto one is a quick one, and usually the coverage that we find for an association is it's called hired and non-owned auto. So people will say, well, we don't have any cars. It's like, exactly. That's why it's called hired and non-owned auto. And it's because people are doing work on behalf of the association, or they're meeting with vendors, and maybe they're going to the grocery store to pick up, party, supplies for a luau that they're having over the summer. And say they get into an accident. The plaintiff's attorney or the injured party's attorney is going to say, well, what were you doing on the road? And say, well, I'm getting supplies for my association. And if their own personal auto policy limits are inadequate for the damage that they caused or the bodily injuries that they caused, they'll go after the association and say, well, you're doing work on behalf of the association. The association is now liable also on top of the auto policy for the damages. And that's why it's hired in non-owned autos. So the association doesn't own any autos. Some do, but very rarely. It's usually up north that we see that. And the non-owned part covers people doing work on behalf of the association using their car. So that's a simple one, and it's always tacked on to the general liability. It's a $100
very minimal cost.
Yep, it's just, it needs 100% needs to be on there. And then the workers' comp, it's usually they don't have W-2 employees, so that's fine. Some do, but usually they don't. But it's for people who are doing work on behalf of the association or volunteering their time on behalf of the association. So general liability policies have an exclusion for work. And if you're doing any type of work on behalf of the association, it's excluded if you get hurt. So if you fall off a ladder doing holiday lights, you're doing work on behalf of the association, it's excluded under your GL. The association's general liability policy is not going to respond for whoever got hurt's injuries. You'd have to have they call it a workers' comp. It's a if any or volunteer basis workers' comp policy. It costs $454.
And so many board members are doing work on the property. And I had a board member one time, Kurt, that was actually doing using a chainsaw, and the chainsaw went through his leg.
Yep.
And I mean, you would never think, you're thinking as a board member, if I get hurt, I'm never going to sue the association. Well, I guarantee if you lose your leg, you might. I mean, that's the reality of the situation. So sorry, I didn't mean to interrupt you, but I just, it's crazy to me because so many board members are doing just simplest things, like just the simplest of things around just pressure washing the pool deck. Would you think that you could get hurt doing that? And probably not, but could you? Absolutely.
Sure. I mean, I have a lot of associations that do, community cleanup days, where they just pick up sticks, or they do, raking in the common areas, and they try to clean it up, or gardening. And someone can strain their back. Well, you're doing work at an association sponsored event and you got hurt. It's excluded under your GL policy, and it's only the workers' comp that will step in and cover that. And then the back end of it, and I got this question again today from another management company, was about vendors who step foot on the association. So every vendor, for every quality management company, will verify vendor certificates of insurance. There's different third-party sites that will do this. Everyone collects a COI for their vendors, and everyone always looks for workers' comp. It's like, well, great, you did that, but no one knows if once that certificate was issued, if they stopped paying their premium, or if they exhausted their own policy limits from prior claims.
Right.
And if one of their employees gets hurt on association property, mowing the lawn, they run over their foot, or doing work and they get hurt. If there's no workers' comp benefits made available to the injured party, the courts are now finding that the association is now deemed the employer, which is nonsense. It makes no sense to me, but we can thank Florida for this stuff. So Florida started it, and now the association is on the hook for the workers' comp benefits, lost wages, medical bills, and it's these if any or volunteer workers' comp policies that will respond to that. So again, it's an inexpensive policy. And it's so valuable to have.
You never know where you're going to need it, so get it.
Yeah, it's the epitome of a
get the insurance. You need the insurance. Just get it. Don't, it's not the time to penny pinch, over very minimal dollars. Do you know what I mean?
Yeah, I mean, there's a lot of communities that are underfunded, and they always we don't know if we can afford it. I'm like, all right, when you see that guy mowing your common area, hover over him like a hawk and make sure that he doesn't do anything, crazy, doesn't fall off the lawnmower.
Even watching him isn't going to do it. He's not going to keep it from happening. I mean,
it's just one of those things where it's you're going to wish you had it when something happens, and every time there's a potential claim that comes out or anything that goes wrong at a community, the first question is insurance going to cover this? It's like, well, you should have thought of that before when we were telling you to buy this coverage, and then
Right.
you vote not to, and you put it in the minutes. It was voted down. You didn't want to purchase this. I had that happen in a community in Alabama where they didn't want to raise their common fees because the insurance was going up. They're underinsured. They're insured to about 40% to value. And they're said, this is unaffordable. We can't pay this premium. We can't pay it. I said, that's fine. You don't have to pay it. Just know that when the next hurricane or tornado comes through and you guys have a total loss, everyone's going to be having their hand out looking for that extra $12 million that you said you couldn't afford at the time for an extra $30,000 in premium. So it sounds like a big number, but we had a tornado go through Nashville. We had a derecho go through Nashville. There was a tornado that went through Chattanooga. There was another tornado that went through Southwest Atlanta. These things happen. And if you're not insured to value and your policy isn't going to be there to respond, or if you have a co-insurance penalty that gets applied saying that you weren't insured to value, we're going to penalize you. And now the association becomes a co-insurer of the community. People are going to be really, really upset when they don't get their money to rebuild their unit, or their unit's going to end up being 60% to what it was.
It's going to be unfortunately a situation where you got to do the special assessments. There's nobody wants to do those. Nobody wants to do that. So get the insurance, guys. I'm telling you. Well, we've covered a lot of information tonight. We're at a little past the 45-minute mark. I told you guys we could go on for hours. I don't see any questions in the chat, so I'm going to go ahead and wrap us. Thank you again, Kurt. I always love talking to you about insurance. I always learn something every single time we talk. Everybody, if you want to get more information from Kurt, I'm going to give you guys his email right here. K Lillie, that's K as in kite, Lillie, Lillie at B Insurance, and that's B as in boy, insurance, just like it's spelled.com. So K Lillie with 2 L's at binsurance.com. So thank you again, Kurt, for your time tonight. I hope you guys found this really valuable.
Thank you for having me. I could talk about this for hours. You're absolutely right.
Well, everybody have a great evening. We'll see you guys next month in our next month's webinar, which will be announced here in the next week or so.